good news for the Indian stock markets, a trigger which could root billions of dollars of foreign portfolio investments into Dalal Street in the coming months. One of the largest research and advisory services in the world, Morgan Stanley Research, has upgraded its rating on Indian equities to overweight, saying it considers India to be on a path of long wave boom. At the same time, it considered China to be at the end of such a boom and downgraded its rating on the country's equities to equal weight. Morgan Stanley raised India to the first rank in its framework from the 6th in its last review, in a report laced with a clear preference for India over China. Morgan Stanley said its overweight rating was based on various economic indicators, including 6.5% GDP growth forecast by the end of this decade. China, in comparison, could have a much lower growth rate. India, according to the report, is on a path of a long wave boom, while China is at the end of one. Morgan Stanley says India's manufacturing sector rallied strongly after COVID. A rapid fade in economic activity hit China, while the capital market in India saw sustained superior earnings per share. China's reported negative earnings revisions and falling profit margins. The report adds that it foresees an upside to the rupee, but warns that weakness in the Chinese currency could hit equities as well. Morgan Stanley cites big supply-side reforms in India for these improvements, while noticing a lack of stimulus actions in China. Other comparisons include an overall macro stability in India versus slowdown in macro momentum in China, the increasing confidence of private equity companies in India at a time when they are trying to exit China, and high household savings in India versus the massive debt burdens on the city governments in China. The report also says that while India was becoming an authoritative voice in global geopolitics, China is increasingly facing global backlash on various fronts. The upgrade is the second for India in the past 4 months. Morgan Stanley Research had upgraded India to equal weight from underweight on 31st of March, citing a resilient economy. The research major has also made specific sector upgrades for India, including industrials, financials and consumer stocks. But the report also warns of some downside risks, including inflation surges and the possible impact of artificial intelligence on services export and labor force. Importantly, the report expects the Sensex to reach 68,500 by December, an upside of 10% from the current levels. Bureau Report, Business Today Television.
If you like the video, do like, comment, share and subscribe.